All right, Miss Aurorah is back with the sun. Okay. We cannot, secured entrepreneurs, we cannot talk about this whole financial independence, coast fire, without discussing capital gains tax. Now, there is a list that has been put out for the worst states for capital gains tax as it relates to investors. Okay. There are 11 states on this list. And I was just like, wow, we've got so many secured investors. And I'm just really curious as to how many of our secured investors have actually made investments in any of these 11 states. So we're talking about long-term capital gains. That means that capital gains that has been held for more than 1 year. All right. There's some hefty taxes to be paid on that, which is why the secured entrepreneurs have everything that we need to do what we need to do to defer taxation legally. Let's get into it. For those of you who do not know who I am Miss Aurorah Dey, and this is the Secured Entrepreneur Movement. All right, now, Mr. Aurorah wants you to go to securedentrepreneur.com. Check out the Sole Proprietor to CEO program, because we're giving you what you need so that you don't have to bump into dealing with any of these capital gains, these long-term capital gains situations. Okay, hit the like button, subscribe, share the video. All right, so 11 states. Let us not be surprised that California makes number one on this list. 13.3% tax. Now, we know that California is well known for placing a heavy tax burden on its residents. And now they even have a new payroll tax where their highest earners in the state will pay an additional 1.1%. Now, I know that that's going to make some people happy. These people who hate rich people love to hear this. Share this video with all the haters that you know. Okay. The thing is, the 13.3% tax is going to apply to the income that exceeds $1 million. I mean, I don't know too many investors that will really actually be happy about that, which is why you have to have your strategies in place. You have to, you got to be solid to legally avoid all of that. All right. AurorahDayConsulting.com, SecuredEntrepreneur.com. Let's get it going. Now, the second state, which I was a bit surprised, New York. New York is the second state that makes this list. Now, I'm surprised about this because even though the tax is 10.90%, that's on income that exceeds $25 million. Now, I want all of our secured real estate investors, secured real estate agents, brokers, explain to us the difference between New York real estate and California real estate, because I would think that they run neck to neck, right? So the tax, okay, in California, 13.3% on anything that exceeds 1 million, but in New York, 10.90% for income that exceeds 25 million. I want to know what the gap is. Is New York City a more expensive place than California? I need Cousin Robin in on this thing, because I'm curious about that. But all right, I'll wait for you all. Comment below. Let Miss Aurorah know. The next state on this list is Minnesota. Now, I was a little surprised by this too. I don't know too much about Minnesota, but their tax is 10.85%, and their highest earners have to pay an additional 1% tax. I'm thinking to myself, What's going on in Minnesota? What is the GDP in Minnesota that you have a capital gains tax of 10.85%, and then you've got an additional 1% tax for high earners in the state? Secured entrepreneurs, let Ms. Aurorah know what's really going down in the state of Minnesota. The fourth state is New Jersey. I'm not at all surprised by this. The rate is 10.75% on anything that exceeds $1 million. Okay. But they say that even investors that make as little as $75,000 would pay a little bit above 6% in tax on that. So the Garden State is getting it in. Okay. New Jersey. And I know we have some secured investors that have property in New Jersey, and some of the counties that this property is in is like nowhere near like New York, so they're not close to the George Washington Bridge. They're way out, like in Wayne, in those places where there's flooding that takes place. Like it's just really quite interesting to me how that whole thing works, but 10.75% on the capital gains, the long-term capital gains tax there in the Garden State. Thoughts, secured entrepreneurs. Do you think that 10.75% is hefty? Is it steep? I know why California is number one now. Okay. The fifth state is the District of Columbia, and it's tied with New Jersey, because it's also 10.75% as it relates to the tax rate. And that is also on anything that exceeds $1 million. They've got this little twist where at $60,000, the taxpayer would pay 8% in tax, okay? But it would be 10.75% for anything that exceeds $1 million. So for all of our Washington, D.C. investors, how do you feel about the 10.75% tax rate if you're exceeding $1 million, which that's easy on property there, right? I would think so. Comment below, let me know, but I would think so, okay? But even if you've got something for $250,000, you're still being taxed. Okay, in a major way, as I understand it. Okay, so I need some clarity on that, because I want to know what property, what type of properties would really be worth if you're not set up correctly, if you're not really playing the true real estate game to legally rid yourself of those type of capital gains taxes. Because I would like to know in those states, how large of a property could you get for $1 million? What's going for $1 million or more? What is the square footage? Okay, that's what I would like to know. I would like to know how large of a living space would somebody be getting for that type of capital gains tax to be worth it. I'm just wondering. Secured entrepreneurs, comment below. Oregon comes in next at 9.9% on the tax rate, but check this out. That's on anything that exceeds $125,000. Now this is for single. I'm calling out single filing. I'm not calling out the joint. Okay, the single filing, 9.9% on anything over $125,000. Now for the joint is $250,000, right? But I'm like, wow. 9.9% on anything that exceeds $125,000. I want to hear about this property. I want to hear, is it oceanfront? What type of property is it? Because I don't know if that's worse than the rates that are exceeding $1 million. So if all you get to gain is $125,000 and you're being taxed at 9.9%, I don't think Oregon is the place to be. I went to St. John's University. And since kindergarten, I acquired the knowledge. And after 12th grade, I went straight to college. I'm light skinned. I live in Queens. I love eating chicken and collard greens. That's not me. That's DMC. Okay. Vermont comes in next at 8.75% on the tax rate. Now, they got something going on that's really interesting. They've got 3.35% for up to $42,150. And then it jumps up to the 8.75% on $213,150. They also have this exclusion in the $5,000 range. And the long-term capital gains rate in Vermont is taxed as regular income. How do we like those apples? The long-term capital gains tax rate is taxed as income in Vermont. Okay, so they have a very interesting thing happening there. Would you like to have your capital gains tax, your long-term capital gains taxed the same as your actual income is taxed? I don't know. I don't know what's going on in Vermont. People tell me that Vermont is beautiful. People love Vermont. A lot of people, I've read a lot of books where the main character was either living in Vermont or went to Vermont to write a book. Very interesting. Now, of course, Hawaii makes this list, right? But the thing that I found most interesting is that, okay, all capital gains tax in Hawaii is a flat rate of 7.25%, right? So the capital gains tax is 7.25%. But the earned income tax is 11%. I cannot make this stuff up. Miss Aurorah cannot make this. Can you believe? I want all my Hawaiian secured entrepreneurs, all of the visiting entrepreneurs from Hawaii here on this channel. Thanks for stopping by. Explain to the secured entrepreneurs how it is that investors can come to the state of Hawaii and have a capital gains tax of 7.25%, right? And then the working class people in that state are taxed at 11%. Why aren't there more fires? Why we keep leaving it up to volcanoes? Okay. And it's no wonder I keep meeting Hawaiian people here in Las Vegas talking about, no, I left Hawaii. Oh no, I left Hawaii. Ain't nowhere in the world. Born and raised in Hawaii. Love Hawaii. Cannot afford to live in Hawaii. And now Miss Aurorah really knows why. Not only are the rents sky high, the property prices are sky high, okay? But now I find out that earned income is at 11%. Everybody needs a business. Everybody needs a business. And let's go here. Let's go here. The sophisticated investors are not ever going to pay the capital gains tax. The sophisticated in-the-know investors will never pay even the 7.25% capital gains tax. How do the secured entrepreneurs know? Maine is next. And this is another state that is doing capital gains tax the same as the earned income tax at 7.15%. So you've got 7.15% in Maine. Didn't Jessica Fletcher come from Maine? And anybody who ever watched Murder, She Wrote saw Jessica Fletcher's home. And I'm sorry, I still believe that Jessica Fletcher was able to solve all those mystery murders because she herself was a murderer. Come on now. We're all of Miss Aurorah's murder, she wrote, "Watching fans, hello." We kept hearing about, what was the husband's name? We kept hearing about the husband. And she didn't have any family members. Every family member that we saw was her husband's family. Grady was her husband's nephew. Everybody who came on the show as her family was the family of this man. Why can't I remember this man's name right now? But anyway, I believe she actually murdered that man. Okay, because they tried to blame it on the military, that he had this military history and, he had these issues, whatever. But anyway, that's sweet old Maine. And we saw the old school doctor's office and everything. I would like to know what's going on in Maine at 7.15% tax. Same tax for capital gains as the earned income. And let me see, what did I read that the amount would be on that? Right, if the gains exceed $58,050, you're stuck with that 7.15% tax rate. Okay, so if you have a thing for Maine, to which the only thing that I have for Maine is Jessica Fletcher. Okay, you come on and tell the Secured Entrepreneur movement about your investments in Maine. The last state that was mentioned on the list, and I don't even know why it made the list, is Washington. Now, Washington has a 7% capital gains tax, right? But it's only on certain long-term capital gains that would exceed, I think, $250,000. But get this, there's no capital gains tax on real estate in Washington. How many of the Secured Entrepreneurs knew that? So I said, now why the heck did this make the list? I want to know some things that I may not know as to why it is Washington has no capital gains tax on real estate. Somebody, Cousin Robin, somebody tell me about Washington. Isn't that don't they call it the Evergreen State? Somebody help a tenderoni out. I need to understand what's going on and why did it make the list? Hello. All right, Secured Entrepreneurs. Those are the 11 states that folks are saying stay the heaven out of as an investor if in fact you don't want to be hit with those taxes. But once again, we know here in the Secured Entrepreneur movement what a majority of savvy investors are really going to do. They're really not going to pay that capital gains tax. They're really not going to do it. Okay, so it would be on the smaller investors who really they don't really have the means to really do it and do it well. So they're going to get hit with it. But we know better here in the Secured Entrepreneur movement, right? All right. So that's what Miss Aurorah wanted to share with you in this video. You all know you can find me, Miss Aurorah Dey, at AurorahDeyConsulting.com. And until next time, ta-ta.